Thank you for coming today. I am pleased to introduce Frank Casey. After leaving the U.S. Army as an airborne infantry ranger, he qualified infantry captain in 1974. Mr. Casey left the Army and started his 39-year investment career, specializing in special operations, which is hedge funds and things of that nature. So he is here to bring you lessons from Madoff. I am pleased to welcome Frank Casey.
Thank you for inviting me. The Daniels Fund, the Monfort, School. Appreciate your attendance today. The story I'm going to speak about this morning is probably the closest thing to a Shakespearean financial tragedy you will ever hear. We may have a few laughs, we may have an incredulous gasp or two, but I want you to remember and keep in the back of your minds that the story is a sad one, it's tragic, people lost fortunes, people were decimated, reputations were destroyed, and people died. The story starts, well, it's not so much about Harry Markopolos, my investigative partner, and not myself, and blowing the whistle. It has something to do about Madoff. It has a lot to do with the incompetence, the complacency, and for many years I believe the complicity of the U.S. regulator called the Securities Exchange Commission. It has everything to do about the victims. The story starts quickly on my background. In 1974, after I left the service, I joined Merrill Lynch as a stockbroker, customer's man. And it was the bottom of the bear market, and from 1974, probably half to two-thirds of the stockbrokers in the United States were wiped out. And I was looking for a way to differentiate myself from the tens of thousands of other brands that they had. And the equities options markets just started trading on the exchanges, so I became the de facto expert, self-anointed. I started reading everything I could on equity options. And I had the tremendous fortune, about 1976, of having a 24-year-old PhD in mathematics from MIT walk in the door. And he was from a wealthy family in the Midwest. And he had the first home computer. Some of the old guys here will know about that. It was a PDP-11. It looked like a 4-drawer filing cabinet. And it sat in his living room around the corner from the Ritz in downtown Boston. And we would go over there at night and work on option pricing strategies. And since you're a business school, we did covered call writing. We bought a stock at 30, we sold a call, giving someone the right to buy it from us at 35, 15% of the money roughly, for 90 days, and they paid us $1.08 for that. And then we got into more sophisticated strategies. Selling the call, 15% of the money, taking the $1.18, and buying protection, 15% out of the money on the downside at 25. So if our stock ever fell through 25, we gave it away. We had the right to put it to somebody. That is called a collared strategy or split strike conversion. That's an anchor point. 1976. I went on to do other things and start an oil trading operation, a risk management operation for Merrill Lynch, Prudential based, using options on futures on U.S. Treasuries to hedge risk on 30-year mortgage production. Three derivatives removed from the underlying. I landed up in 98 actually, working with Rampart Investment Management. Rampart ran $9 billion in covered call writing, where pension funds pick the stocks, or their managers at Goldman Sachs, JP Morgan pick the stocks. And our job was to write covered calls on an ever-increasing basis to basically generate an extra 1.5% per year on the portfolio. And my job at Rampart was to design some new products and also to market what the portfolio manager was doing, is his skill set, Harry Markopolos. And so I started asking questions, and it seemed to me that some of the wealthiest people in the world wanted 1% per month. Frank, if you could just generate 1% a month with no risk, right? I was thinking how I could do that, and I couldn't find anything in the options world directly, so indirectly I started looking at taking 25 to 35 hedge funds of different ilks and putting them together into a common pool called a hedge fund of funds. And basically they would balance out the volatility of one another and try to produce a return stream with a high degree of probability distribution over rolling 36-month periods of about 1% per month. And then I took that to banks, and I got banks to guarantee my clients wouldn't lose their principal. And they would write a AAA guarantee to that effect. And my job was to keep the portfolio from falling at least any more than 5%, because I would be defeased into a zero coupon treasury bond. My clients would lose their time value of money over 10 years. But I thought it would sell tremendously to the accounts of insurance companies. Nobody wanted to buy it, too complex. Right church, wrong pew, as they say. It took off, the concept took off in Europe among the super wealthy. And then Harry says to me one day, you know, I have a friend who works for a manager down in New York, who's a manager of managers, and he hired one single guy that's putting out 1% a month like clockwork with no risk. I said, impossible. I'm doing all these machinations to do that. And he said, why don't you go down? So I go to the Madison Avenue, and I meet the young man who introduces me to Thierry Megon de la Villiers. Thierry Megon de la Villiers was French royalty, a noble. He owned a 100-room castle in Brittany. He used to go out shooting with the princes, hunting. He was also a world-class sailor in the Olympic Star-class boats. I'm a sailor. I'm not Olympic quality, by sure. And so we formed a common bond. I said, Thierry, I understand you hired a manager that's producing 1% a month. He says, I do. I said, who is it? He says, I cannot tell you. I said, that's odd. I said, why is that? He says, because if this manager hears that I have released his name, he will fire me as a client and return all my money. I said, why does he want it secret? He says, well, the business is being done ancillary to his main business, and he doesn't want anybody to really know. Seems odd. I said, Thierry, if I was producing 1% a month for you like clockwork, I'd have my face on every billboard between Boston and New York City. I said, what is the strategy? Split strike conversion. I know what split strike conversion does not do. It doesn't produce 1% a month like clockwork. That's because if you stop and think about it, I bought the stock at 30, it's a beta strategy. The stocks have to go up for me to make money. And it doesn't take too many stocks that fall 15% to wipe out the gains of a few that go forward, right? So basically it is a market-driven rate of return. It's highly correlated to stock markets. And so if the market's down, how can this guy produce 1% positive return? Didn't ring true. I said, what does the manager charge you? He says, he charges me nothing, says Thierry. He's happy with the trading commissions that he makes. I said, well, if he's not getting the money, who's getting the money? A hedge fund guy that's producing 1% a month could charge a 1% fee off the gross returns and 20% of the profits. And if this guy's producing 12% per year for you, he's actually producing 16% because somebody's getting the fee. And he says, I get the fee. So 16 minus the 1% fee is 15, 20% of 15 is another 3, 4, off the top, next 12. And so Thierry is making a lot of money investing with this manager. Now Thierry's job, honestly, was to find emerging hedge fund talent, give them some money. Usually these hedge fund managers have limited capacity because they're exploiters of niche in imbalances in a capital market structure somewhere in the world. And so if they start trading with too much money, they trade themselves into efficiency, exploiting that niche. So they have limited capacity. Thierry's job was to go in and find a manager early, give that manager some money, and then say, figure out your capacity was $1 billion, I want a third of your capacity. And then he marketed that capacity to European wealth management banks, providing access on an international basis to specific managers, hence the name of his firm, Access International Advisors. And so Thierry was tied into all the wealth managers around Europe, and I said, well, how do you get these guys to invest? He says, I give them a retrocession of up to half of what I charge as a fee. Retrocession apparently is a French word for kickback. So basically, he was taking the 1% plus 2% more right, or to 3% more, and he was splitting half of it with those guys who were providing the clients out of the wealth management banks. So the wealth manager in XYZ Geneva is charging Prince Philippe, whatever, right, 50 to 75 basis points to manage his money, trying to produce a rate of return of around 5 to 7%. He goes to the Prince Philippe and he says, I have a manager that might be able to do somewhere between 7 and 12. Do you want me to invest in him? Well, sure. What's the risk? Oh, no risk. He never loses money. It's a specialized strategy you won't really understand, friends. But we at XYZ understand it. Go ahead and do it. Money moves over to Thuray. Thuray moved it down to this specialized manager. Nice conduit. Thuray moved back half of the fees to that bank. So the bank's picking up over top of 50 basis points, maybe another 150, 200. Not a bad business. So, I said, what do you get from this manager? He says, these pieces of paper are mailed to me, these confirms. And I look at them, and it's like buy 1,000 IBM, sell index option, which made no sense to me, on the S&P 100, top 100 capitalized stocks in the S&P 500. And so, I look at the confirm, and it has net. Everything's net. There's no commission specified. So I know, and the name's blanked out on the top. We had taken a magic marker and done this to it. But I know that this guy's a market maker because they trade net. In other words, if they buy IBM at 99, they sell it to you at 100, that's their business. If IBM's trading at 100 and you're willing to accept it at 100, they marked it up. It's a net trade to you, no commission specified. So I said, basically, Thuray, what you're doing here, it's not like you have an account at Charles Schwab and you've got some third-party manager managing your account, and Schwab is the custodian and they're sending you the confirmations. You basically are taking European wealth management money and you're moving it down and giving it to this guy on the floor of the exchange as an unsecured corporate loan. He says, yeah, but I trust him. And so we then basically went out and, excuse me, I forgot to shut off my phone now. So anyhow, I said, well, listen, if I can develop a competing strategy, would you take me into the wealth management banks of Europe? He says, if it's as good as what this manager does, surely. I said, what do you have when you, how much do you have with this manager? He says, $320 million. This is the spring of 1999. Let me put that in perspective. You, if you were a manager of managers, would never allocate more than 10% of whatever the manager's presently running. So if he's running $100 million, you might give him $10 million. And that's to reduce agency risk of the manager blowing up. If he has $320 million multiplied by 10, it's an over $3 billion. Let me put that into perspective. This is a hedge fund strategy. The biggest hedge funds in the United States, the Soroses, the Trouts, the Tudor Joneses, the Monroe Trouts, were running less than $2 billion. This guy's running more than the biggest dogs on Wall Street, and no one knows he's doing it. That's powerful information. So I go running back, but before I go running back to my office in Boston, I'm standing by a clerk's desk, and I spin a piece of paper. And it's a confirm, and it says Bernard Madoff Securities on it. I didn't even know who the guy was. I came from the derivatives world, the futures world. I didn't deal in block trading stocks. So I go look it up, and then I go home. And I talked to the bosses at Rampart, and I said, listen, I may have access to, through Access International, to the big wealth management banks of Europe. And they get all excited. And I said, I got to compete with this guy, Bernie Madoff. But the strategy, he's not doing what he says he's doing. I don't know how he's generating the return. We have to reverse engineer it. So they take me down to see Harry Markopolos. Harry stands there, I swear to God, 4 minutes. And he looks at my strategy returns, that Thuray gave me the returns, but not the name of the manager. And he says, Frank, come on, you're an options guy. You know this is bull. It's a fraud. I said, I know it's a fraud, but what is he doing? Reverse engineer it. He says, I'm not going to reverse engineer it. It's a Ponzi scheme. I said, oh my God, Harry, don't say that word Ponzi. I said, do you know who this guy is? He was the guy that created the over-the-counter automatic trading system, NASDAQ. He became the chairman of NASDAQ. He trades 5 to 10% of the daily volume of the U.S. stock market. This is one powerful guy. We don't call this guy a fraud. let alone a Ponzi, unless we get more information. He says, I'll hold off, go get some more information, but I'm not reverse engineering this thing. So, just so happened, a wealthy family out of the Carolinas calls me in the fall of '99. They said, we hear you're building these structured notes. We want to meet you at the Swiss Hotel down in New York City, and we want to know if because we sold our furniture making business and we put our money into our own fund of funds that we've created. We've hired 2 managers so far, and what we think that we want to do is put it inside of your structured notes, and maybe you can raise a lot of institutional money for us. I said, possibly. I go down and we're sitting on these hassocks around these low-slung tables in the lobby of the Swiss Hotel in New York City. They show me a 75-page prospectus. Here's what a prospectus says to you. The manager can do anything, to anybody, anywhere, anytime in the world using any instrument. That's what the prospectus says. Written by lawyers for the manager, not for the investor. So then I go right to the strategy, split strike conversion. Again, go to the back, addendums. Manager A, unnamed, also ran. Manager B, 45-degree angle to the right, no downside deviations at all. I look at manager B and I said, oh, Bernie Madoff. Who told you? I said, don't worry about who told me. They said, don't tell anybody we told you. I said, I know. If the word gets out, they'll give you all your money back and you'll never be able to get these returns. Can you use him in your structured notes? I said, possibly. These guys have been investing for many years. So with Madoff. I said, I wanted those return streams with monthly returns. So he gave me the prospectus. I ran back to Harry. Harry built a mathematical model, an algorithm, to basically randomly select 25 to 35 stocks, which is what this manager said he was doing, from the OEX 100, and write index options, calls, and then buy index option puts to protect them because they're supposedly highly correlated to the index. So now you've got not only stock specific risk, you've got index correlation risk against the basket. And so, which is even riskier. And so he runs this algorithm for 4 hours. He comes back to me and says, do you want to know what it produced? He says, the U.S. Treasury bill rate. T-bills weren't earning 16%. So now we know it's a fraud. Absolutely. He says, I'm going to write it up and give it to the SEC. I said, okay, fine, go about it. So he runs the SEC in May of 2000. Ed Mannion worked at the SEC, he was the chief investigator. Ed Mannion used to work for Peter Lynch at Magellan Fund many years ago. He understood capital markets, the inefficiencies of certain capital markets, how you exploit them in hedge fund returns. His boss didn't understand a word. The bosses at the SEC are all lawyers, and all deference to lawyers. If I need a lawyer, I'll hire one for a specific purpose. You don't put them in general command of fraud investigations in the capital markets. They don't understand the capital markets. That's not their job. And so in either case, the SEC is all fraud, lawyers. And so nothing was getting done, apparently, at the SEC. So surely the Boston office heads didn't understand a word, because Harry said to me, if blank books were dollar bills, Frank, we'd be rich. So initially, we didn't go after Madoff because we had some altruistic goal in mind. I wanted to raise Maison de Lavilliers' affections. I was competing with Madoff initially. That very fact has been heralded by every head of the SEC since. They were disgruntled competitors. Yeah, maybe when the first couple of weeks, when we thought we could actually compete with a legitimate operation, but as soon as we determined it was a fraud, you can't compete with a fraud. You come out with a number, he comes out with a better one. You just mix it up. So I needed to raise money. I wanted access through Access International to his clients. I had to get rid of Madoff. So Harry and I said, we're going to take the guy down. Create a level playing field. He's a threat to the capital markets. He may be running 3 to 5 billion now, but if this guy cancer grows, he's going to be harmless. And so we shook hands on it. I left Rampart in the end of 2001, and I ended up at hedge fund of funds. And we were very sophisticated hedge fund of funds. We basically were risk managers at our level, neutralizing with derivative overlays the embedded betas in individual manager return streams. We were producing a pure essence of market neutral, non-correlated returns. And then we were glomming them on to the S&P futures contracts and treasury bond contracts and creating enhanced indices at 9% over, with betas of 1.0 with those indices. And so we built that thing to over 2 billion from 200 million in 6 years. So in any case, I was over there, but it afforded me the opportunity to go around the world and talk to hedge fund guys. And I'd be someplace and I'd be talking to the risk manager at some big Japanese bank in the alternative investments division. And I would say to him casually, what do you know about Bernie? He would say, what do you know about Bernie? They never had to use the man's last name anywhere in the world. Just Bernie. And he did not want to tell me, maybe, that his bank was the administrator or the custodian who's verifying that these assets actually exist for some feeder fund or funds of funds that was investing primarily in Madoff. He didn't want to tell me that, and I didn't want to tell him that I was hunting Madoff, so we do a little sword dance. He gives me a little information, I give him a little information. We both walk away a little more knowledgeable and happier, neither knowing the other's position. And I would do that with hedge fund guys who competed in similar strategies. I would talk to option floor traders. We, trading at Rampart, ran 9 billion. We knew every option floor trader there was. And we would say in 2000, 2001, what do you know about Bernie? And the floor trader would say, you know, I heard he's doing a lot of options, but I'm not seeing the flow. Can you get me an introduction? And so we knew that the biggest traders weren't trading. So we decided we had to get, since the SEC in Boston didn't understand it, and they were going to mail it down to the SEC in New York, and we never heard a thing, that we had to blow the doors off of this thing. So Harry calls the Wall Street Journal, Washington Times, you name the paper he went to, Barron's, everything. Nobody would touch it. You do not have a smoking gun. You have a theory. We don't take on big guys like that on theory. And so Harry and I say, we need an investigative report. Somebody that's willing to put his credibility on the line. I'm speaking in Barcelona. I take my wife with me, and we go to the Barcelona airport, and we get in a cab, and we're going to the conference. And just as we're pulling off from the curb, there's a rap on the window on the passenger side, and this Harry guy says, are you going to the conference? I can't get a cab. I said, sure, jump in. He jumps in the front seat. He says, hi, my name is Mike Ocrant. I said, Frank Casey, my wife, Judy. He says, I'm with Hedge, Managed Account Reports Hedge. I knew that they had the largest database on hedge funds in the world. They were the authority on hedge funds. And I said, hi, I'm Frank Casey. I'm speaking at this conference on structured financial notes, wrapping, and portable alpha. He says, you're speaking at my conference. I said, great. He says, I said, what else about you, Mike? He says, people don't know this, but I'm a financial investigative reporter. He says, I've been very successful in blowing the cover on a couple fraudulent deals on Wall Street. I looked up at this guy and said, thank you, Lord. So I said to him, I said, listen, Mike, I'll bet you dinner in Barcelona for my wife and I, that I can give you a manager that's 2 to 2.5 times larger than anybody in your database, that will probably blow the doors off of the risk-adjusted rate of return of any manager in your database. He says, I got to take that back. I said, but here's your out. He's not a hedge fund guy himself, but he's using hedge fund strategies, but hedge funds are formed for the specific purpose of putting money into his corporation and letting him run it. He says, I'll take that back. Over dinner, my wife had the most boring dinner in the world. She didn't understand one word of it. And I was drafting and drawing napkins on the table, cash flows around the world, how this thing was working, split strike conversion, you know, the whole thing. Michael looks at me and says, just on the surface, he says, I've got to investigate this thing and write the report. Because if he's running $5 billion, then he is the biggest manager, and if he's blown everybody off in my database, he's the world's best manager. Forget the fraudulent aspect, and I don't understand options. I said, Harry and I will teach you long distance, he's in New York. So we drafted. From the winter of 2001, he writes his report. In April of 01, late April, he calls me up and says, I'm about to go to print. I said, great. He said, I've got to call Madoff and give him a chance to comment. I said, he's going to call him. He's never even going to admit that he's doing anything. He says, I've got to do it. I said, okay, fine, go ahead. I expected not to hear back. An hour later, Michael Ocrant calls me and says,
God, you won't believe this. I got a call back from Madoff himself. And he says, Michael, I understand you've been investigating and you're about to write a report because I'm hearing it from the street that you've been making calls. You know, people's careers have been destroyed because they made false steps. And he says, before you go to print, we should talk. And Michael starts flipping through his calendar, looking forward, you know, when he might be able to marry with him. He says, how about, and Madoff says, how about right now? Ocrant gets nervous. The market's closed. This guy wants to sit down with him. He calls me back in several hours and he says, Frank, you've got to go home. I said, what are you talking about? He says, let me tell you, I've been around guys that are fraudsters all my life. My own uncle was a fraudster, and I was raised by him. I know the pushback signals, you know, if you threaten them a little too hard and push, they get aggressive and counter threat. You know, they look up to the right, they recall, look up to the left, they're thinking of an answer. All of these things, these biofeedbacks. So he says, this guy had none of that. He says, it was like sitting at the Ritz having tea with my Jewish uncle. He says, he answered every one of my questions. I said, did he really answer your questions? I said, did you ask him the first question I asked you to ask him? He says, I did. At the end, I said, Mr. Madoff, my investigation has uncovered that you might be running upwards of $10 billion. I pulled that number out of the air. I knew it was somewhere north of $5 billion. I didn't know 10. Madoff looked at me, he said, for a couple minutes, almost a minute, and he said, I'll admit the $7 billion. I said, we got him. He says, what do you mean we've got him? Harry's calculated that the open interest, or the number of contracts outstanding on the exchange, wouldn't cover $5 billion, let alone $7 billion. He's bigger than the market. And his volume would be 7 to 65 times the daily volume of the options exchange if he was executing this strategy. There's just no way this guy's doing that. And so I said, did you give him the follow-up question? So no matter what Madoff said, Mike was to say the following. If you're running that much money, how come we don't see your footprint on the floors of the options exchange? Well, Madoff isn't stupid. As soon as Ocrant started to ask the second question, how come we don't? He said, you will not see my footprint on the floors of the exchange because I don't want anybody to know what I'm doing. They will pick me off, they'll try to reverse engineer me. And he says, I've been in business a good number of years doing block trading, providing liquidity to the market. So I get informational flow from these block trades, which, by the way, if he's trading for somebody else, that's called front run, that's illegal. And so, because he's trading against his customers, Putnam, Fidelity, those kind of guys. So anyhow, he says, and I do business with a couple banks on swaps. I said, Michael, that's nonsense. I said, this guy, he says he's $7 billion. What bank in the world, and he's dealing with two banks, what bank in the world is going to give a broker a $3.5 billion to a $7 billion unsecured line of credit, not knowing what he's doing with it? Michael says, you're right. I've got to write the report. Go to print. Goes to reprint. Madoff tops the charts. Traders ask how. He doesn't talk about fraud. He talks about all the comparative analysis on reward to risk. We're giving each other high fives in Rampart's office. This thing is going to take this guy down. The investors are going to start asking questions. The SEC is going to ask questions. Nothing happens for 4 or 5 days. Barron's picks up on it, which is a weekly financial publication. They write a follow-up story on this thing. Most of what Ocrant said, plus additional stuff that Aaron was working on her own volition. Surely, the SEC may not have the budget to buy a subscription to a trade publication like Hedge, but surely they must read Barron's. Here comes the posse. We wait a week, 2 weeks, 3 weeks, a couple months. We get really nervous. Who is this guy? How powerful is this guy that he can squash a potential SEC investigation? After 9/11, SEC Boston had a new manager. They asked Harry to come in and re-explain everything. They took pictures of all the grease boards, drawings that he was doing. Each one they took a picture of. Mike Garrity, the head of that, says, I understand there's smoke here. I got to find the fire. and he looks and investigates for a week or two, and then he comes back and says, you're right, I'm referring it down to the New York branch of the SEC. It's their responsibility because Madoff's under the territory. Harry says, I'm not going to sign anything. I'm fearful. Because if this guy's stealing billions of dollars around the world from not only wealthy investors, we were getting information that he might be taking money from Russian oligarchs, KGB. And I don't have time to go into why I believe the KGB runs the mob. They're investing and through the foreign banks to catch me over lunch. We were picking up information that while Madoff was always closed to new business, feeder funds were popping up in British Columbia, Bogota, and Colombia. Let me tell you something. If Madoff figured out that Harry Markopolos was blowing the whistle and trying to undo his whole empire, and Madoff was making money on it, but I'll tell you, there were guys that were feeding him the victims that were making a lot of money on it. Tens of millions of dollars per year. And if the victims are the oligarchs and the boys from Bogota, those guys have a unique way of manager termination. Therefore, Madoff would maybe be fearful for his life. And who would you rather deal with? The boys from Bogota or Pop Harry? And so that was the thought process. I wasn't worried for myself, I was covert. Chelo, who I hired away from Harry, he's the assistant portfolio manager at the fund of funds, was also traveling the world contributing information to hedge funds. Chelo was covert. So anyhow, summer of 2002, Harry's still getting pressure from the bosses at Rampart to produce a system that will compete with Madoff, even though because they don't understand like what we know, okay? And so Harry keeps putting it off. He calls me up and I'm down in New Jersey, and he says at the time, I've got it, I've got a strategy, and I'm going to Europe with this strategy. I said, I got to see this thing. He flies on down, he gives me the 75-page prospectus. You skip that, we know what that says. We go right to the back, and I'm reading the strategy, and I said, Harry, this is absolute bull. He says, it's honest. I said, but Harry, you're trading naked index options on the last day of trading. I mean, if these things go in the money and become valuable, I said, and you happen to get out of bed on the wrong side that day, well, your clients can lose 20, 30% of their capital that one day. He says, oh no, 50. I said, who would buy something where they can lose 50% of their money? He says, I might get an 8 or 10 year run, and I could make 15 to 20% per year, and then I'll lose half. They'll still be happy. He says, all I have to do is have staying power. It was almost tongue-in-cheek from a geek. Because he knew that he would never do it, invest in it. I said, who would ever buy this? He says, hey, McDonald, do shit. He's taking me to Europe, and he's taking me to 20 different banks. So Thuray takes him to the Champs-Élysées, stands him under the Arc de Triomphe. And he says, look up there under the name of Napoleon. And emblazoned on the names are name Megan, which is Thuray's name, and a whole bunch of other names that ring a bell. So Harry takes his meeting sheet out of his pocket, and they're all there. They run the wealth management banks of Switzerland and France. Their ancestors were the field marshals and Napoleon, and admirals for Napoleon. The New World of Europe. They run the banks. And Harry went and saw 20 banks. 14 of them said the same exact thing. You know, Harry, nice return, more risk. Better return to Madoff, more risk than Madoff. You know, we have money with Madoff. Madoff's closed, you know, he's not accepting any new money. But we at XYZ in Geneva have a special relationship with Madoff. And he takes our money and our money only. You hear that once, maybe. You hear it 14 out of 20 times. He calls me up, and he's nervous as a cat for a couple of years now. He really believes that he might be a target for Madoff, A. And B, this thing, I capitulate. I had been arguing that this guy was front-running. This guy would not need to run a Ponzi scheme. I could not believe that this man would run a Ponzi scheme. And then I said, now Ponzi. And so we began building what I call a mosaic of intelligence. You don't have a smoking gun. Nobody admits they invest with them. And you're trying to figure out how much he's running and where the money's being funneled through and how much money he's running and how he's doing it, transferring money around the world. So we basically are intelligence officers doing this thing. And I'll tell you, not to wrap myself and Harry and the team in the flag, the reason was to do the honor of the country. Harry's ex-military officer, I am. And I'm going to tell you, it boiled down to integrity. Integrity in business. Without integrity in business, you have nothing. And so this was going to destroy the U.S. capital markets. It was surely going to destroy the reputation of the SEC regulatory body. And we wanted to save people from losing what we considered at some later point for being $50 billion plus. Harry wrote a piece in October of '05. You'll see it on the back sheet here, and it's down on the lower right-hand quadrant. And this piece in October of '05 to the SEC was 26 pages long, 29 case studies, red flags. You could have taken an English major who knew nothing about capital markets, said to him or her, pick 3 randomly, go in and ask, made off the answers to these questions, and you would have had the fraud. Who to call, their phone numbers, where the money's moving, so forth. All there. He said it with type that looks like Titanic sinks. The world's largest hedge fund is a fraud. Do you think if you're in charge of investigation at the SEC, you might want to read that piece? Right into the trash. Harry descends into paranoia. He goes to see the police. He tells them the whole story. The police chief says, yeah, you're going to get popped. He says, here's a stick with a mirror on the bottom. I want you to check your car every day for bombs. Here's a weapons permit. And here's what I recommend you carry for heavy, dangerous days and light days where you don't suspect any accident. And so Harry, with his newly born twins, is checking his car every day for bombs. And so this went on from around '05 to '08. And he's descending increasingly into paranoia. In '08, just in November of '08, I was in a Boston high-rise, and I'm speaking with this fellow in charge of product development at his bank. And I'm giving him my wares and what I can do for him. He looks at me after a half hour and he says, Frank, this is all too complicated. Our clients are retail-type investors. They're never going to understand this. And I said, I understand. So I pack up my bag and I'm walking out the door. And this fellow says to me, what do you know about Bernard Madoff? I spun, I froze. I spun. I said, who are you? And I'll call him Abe. And why are you asking me? He says, you know who I am. I'm Abe at XYZ. I said, no, who are you? Are you family? Are you a friend? Are you an investor? Are you running in a feeder fund? Why are you asking me? He says, I'm listening to you talk for 30 minutes about derivatives. And I said to myself, this guy's got gray hair. Who else would know about a Madoff strategy if it weren't for Frank Casey? So he asked me. And I said, well, I don't talk about anything like that if I'm involved or not. You know the old, I'll neither confirm nor deny routine. And he says, you've got to help me. And I said, what's your story? And he says, I'm going to tell you, but I don't want to take your story. So I want to hear your story first. And I said, hey, if my name gets out on the street, I'm going to be looking for justice. And he said, I understand what you're saying. Don't worry about it. So I told him everything I told you. And I said, okay, Abe, what's your story? And he said, I married one of the wealthiest Jewish women in the United States. She's sole heir to the family fortune. And at my wedding, Bernie Madoff slapped me on the back and said, now that you're extended family, I'm going to let you into my fund. And he says, I'm a finance guy, but I'm not an options guy, and I'm looking at this return going up at a 45-degree angle with no standard deviations on the downside, especially. And he says, I can't believe it. And my father-in-law has been putting pressure on me because at the wedding he said, now that you've married my daughter, it's your responsibility to take care of her. Bernie's been my friend for life. I have all my money with Bernie. You should put your money with Bernie. And so he says, I've been struggling with the family for 2 years. And so he says, you've got to help me. Would you put it in writing? I said, I don't think I want to pull it in the head. He says, you've got to put it in writing because I don't understand everything you're telling me. So I went home and I thought about it. I had a drink. I had a cigar, and another drink. I wrote the longest email in my life. 26 of the 29 red flags, 3 of them pointed right at me. Scrambling the numbers, scrambling the dates, blanking out the names of the contacts, all of that, but leaving the essence of the whole argument. Put a disclaimer on the bottom. You'll learn about disclaimers as you get into business. Put a disclaimer on the bottom that a dog found it on a sidewalk, basically, brought it over to me unsolicited. I read it, but I can't vouch for anything, so do your own due diligence. And so, I hit send. Nothing happens. 30 days later, December 11th, Madoff capitulates. And Harry calls me before I heard the news, and I'm riding in my elevator, and he says, at my high-rise in Boston, and he says, he's screaming, Madoff capitulated, he admitted to $50 billion. We sent the last letter to the SEC in the spring of '08, said, we gave this thing to you at $3 to $5 billion, is now in excess of $50 billion, you should burn in hell. And so, people won't do business with me today because I still think I have a target on my back for the SEC. But in either case, he admitted to $50 billion. I get back up into my house and I'm talking to him on one cell phone, and my other cell phone rang, and it's Mike Ocrant, the investigative reporter, and we're doing one of these numbers. My house phone rings, and my wife says it's a business call. He won't admit who he is. He won't say, but you know him, and it's reference Madoff. And I figured some slick reporter has already found me in a half hour, and it's Abe. So I say to these guys, I'll call you back. And I said to Abe, hi Abe, how's it going? And he says, Frank, I guess you've heard the news. You're probably talking to Harry. I said, yes, I was, and Michael, because they knew the players. He said, what happened? He said, I sat my father-in-law down at the kitchen table, and I swear to God, I read him every word, because I didn't understand some of the words. And he started rocking back and forth, and next thing you know, he was bending over, he had his head between his knees, he said, who are these guys? Where are they getting this information? I don't believe it. It can't be. No, it can't be. I've known Bernie all my life. He would not do this to me. I'm his friend. He says, we just lost everything. I picked up the phone in such rage and called Harry. Because we, up until that point, 30 days before, we did not know about that affinity fraud of culture and religion. We knew about the affinity fraud of floor trader to investment bankers, but we didn't know about that. There was no need to bring in the individuals. There were people that survived the Holocaust that lost their life savings. Charities were wiped out. Endowments were wiped out. Postscript. Before I left Rampart, I had another business dealing with Thuray, Magon, Little Village between our two firms, Access and Rampart, unrelated to the whole structured something else, an options floor trading, providing liquidity. And I said to Thuray down there over dinner, just he and I said, Thuray, going back to Madoff, I said, if Harry and I are correct and you are wrong, what are you going to do? He said, you're not right. I'm telling you, I know this guy. I've checked him out. I said, but if we are right, what happens? And he put down his drink and he looked right at me and he says, Solomon, if Harry and you are correct and I am wrong, I am a dead man. And I nervously said, you don't mean that literally. He said, let me put it to you this way. I have my total reputation on me. I have all of my personal money. I have all of my family money. His family bailed out Louis XIV. You know, I have every wealth management banker in Europe in it. And I probably have half the world of Europe. When a man tells you that, you realize he's totally captive and there's nothing you can do. His identity is Madoff. He has sold his soul to the devil. There's nothing you can do. A couple weeks later, after Madoff capitulated, Thuray Magon Lewis went up to his office and he slit his arms down with box cutters and a cross. And he let himself out in a trash can. And when I was doing front lines, PBS's front lines, the Madoff affair, Marty Smith asked me about that, the producer. And I said, in my mind, maybe my mind only, Thuray Magon Lewis was a nobleman, I thought, at the time. He was a French nobleman, for sure. He was a sportsman. He could have created a hunting accident or a sailing accident if he just couldn't take the pressure. He chose the methodology of death that he did to atone for his sins of omission. And they said, cut. And then Marty Smith said, I've got to get that back up. We finally found Thoray's brother in Paris, and Thoray's brother said, when you fail your friends and your clients, you must pay the consequences. This is how we handle words to that effect. He went out like royal in the old days. And I cried. Thank you for your attention.